Just want to give you a quick update on the market and what's going on in the world these days. Well, we had the end of quantitative easing yesterday. The Fed finally did away with it after, 7 years and $12 trillion later. The market's taking it in stride. It's up nicely today. Not a big negative impact. The big question, of course, will be when are they going to raise interest rates? That's probably what's going to affect the market the most. I don't see it, as I wrote in the book, Facing Goliath, How to Triumph in the Dangerous Market Ahead, that we've got deflation. PPI and CPI figures, those are the inflation figures. They're still well under 2%. The Fed wants at least 2%. Anything less, they consider deflation. Of course, it's good for us. If you have money, it means you're buying goods cheaper and with no inflation. However, the economy, or a capitalist economy, likes some inflation because, as we saw in Japan, when you have no inflation or disinflation, otherwise known as deflation, what you get is people putting off purchases. And if you could buy tomorrow something cheaper that you can buy today, you tend not to buy, and that's what's happened to Japan for the last 25 years. So the Fed is more concerned about having a little bit of inflation. They want to see at least 2%, which is why I don't think rates are going to go up for at least a couple of years. So the big fear of the market is that it'll go up sooner than expected, maybe at the beginning of next year. I don't think it's going to be at least for a year or two. And if they do raise interest rates, that will probably be the thing that affects the stock market the most. I have been pretty right on the button the last 6-8 weeks. I expected the pre-earnings nap where the market would have a correction. We got the 10% that I was looking for, which is a nice pullback, a nice breather. And it looks like, the fourth quarter is going to be strong like I expected. Earnings have been better than expected. I think the fourth quarter will be stronger than expected. It's not very broad-based, though. A lot of the small caps, especially the Russell 2000, are still in a bear market. Interest rates are going up slightly, so some of the bond and income-type investments are not performing all that well. So, it does make a difference on where money is. You can't just throw caution to the wind. Of course, we're always managing portfolios to get the best return we can, but with the least risk possible. We're not looking for just, everything all we can get with all the risk, because it doesn't do any good to have these wild swings. Invest for need, not for greed. So long story short, the fourth quarter should be pretty good. Going to be a little volatile as we get close to the elections. Most likely after the election, we're going to see continued a mess in Washington. There's not going to be any consolidation of any house. And so that's pretty much what Washington and what the market likes anyway. So fourth quarter should be pretty good. Beginning of first quarter, hopefully will continue to be good. And we're going to watch interest rates. And if we do see interest rates rise, or if the Fed starts to raise interest rates even just a little bit, that might be a signal that the next bear market or big correction is about to happen. So far so good today. If you have any questions whatsoever, always feel free to give me a call. Thanks for listening.